Pete McGuire, let's bring him into play, CEO of XM Group, live in our Sydney CBD studio. Well, welcome to you, Peter. On the docket, we've got that meeting in Algeria still pending, but the Friday action, just explain that move in markets. Sustainable or not?
Well, good afternoon, Carson and team. Look, it's been quite a dramatic week. When you put your mind back, Carson, over the, say, the last 3 to 4 sessions, we're up the best part of a 10 or 11%. We've got Brent touching that 47. You've got WTI just a few cents short of $45. So it's had a very, very strong uptick. And as we can appreciate, the market is really, gaining some headwind. I would say that we've got some interesting data coming out this week, worse than expected numbers, really, when you look at the consumption from, the likes of Japan, US and China. So I think that the market will probably take a little bit of a breather for the next couple of days.
The risks of the Fed minutes Wednesday and the dollar taking flight, again, it seemed to be one contributor to capping of the gains last week. How alive a threat is that this week?
Well, and put your mind across also, we've seen the bulls come back out into play as far as speculators and the hedge funds, so they're pushing the market higher. But certainly when you put your, think about what happens Wednesday, those minutes, that could really put a handbrake on it. And of course, any thoughts as far as a rate rise for September, then roll your mind across UK week numbers coming out and what we're expecting from retail sales and the like post-Brexit. So I think that, any form of momentum moving forward is going to be a little weak, towards the, say, Wednesday, Thursday. We'll just have to, wait and see how it all pans out.
Yeah, I mean, the idea of, as well, the pressure to restructure now coming on the material companies themselves even. You'd have to say maybe less of an impost as we look at these, at these rallies in the commodity prices.
Well, yeah, but take that on board also. I saw some interesting data coming out as far as Poland. And this is where we've spoken about Iran, and until you actually see and really appreciate the numbers, Poland's saying, well, now it's moving away from Russian crude and rolling across to Iranian crude, to a great worrying thought as far as Russia, because it naturally wants to build up its production and, of course, its supply into Europe. But more importantly, the numbers coming out of Poland, we're seeing a rise of fourfold as far as Iranian crude from this time last year to what they're doing now. So they're really, lifting their stake and trying to tackle as many markets as possible.
Peter, Scott Phillips from the Motley Fool. Thinking a bit longer term on that space, though, to some degree, these products are, well, they are commodities by definition, different grades, different amounts of refining needed. But realistically, to what degree is that going to be a material problem over the medium term, or simply it's a matter of Russians find somewhere else to sell their oil, it all goes on a world market, the price gets cheap enough, someone's going to buy? Is this a short-term problem, or is this genuinely a longer-term political issue?
Well, I think, Scott, good afternoon, but I think there are so many different components to it, because naturally everyone wants those production numbers which they're producing at record highs, the Russians and, of course, Saudis, both over 10 million barrels a day. So they're vying and they're fighting for, looks like, the consumer and, of course, someone to be their other side of the trade. Now, when we put our mind across it, I think you're going to see ongoing disputes and ongoing problems leading into this Algeria meeting. Everyone's trying to support themselves. You've got Venezuela cash-strapped. So it really is causing great concern across all OPEC and non-OPEC members. So the 26th to 28th of September, Scott, are going to be very crucial days to get a further understanding of where we push forward leading up to Christmas.
Okay, what are you seeing on the horizon with demand for a key industrial commodity like copper? Again, because the discussion being, and we won't get this from BHP tomorrow, but it's swirling around Rio still. Are they wise and right to now perhaps bulk up, not do an Alcan style overpay, but look at the state of the market? Glencore's got some copper assets on the docket. Why not make a move? What is the reason to wait now?
Well, it's very cheap, Carson, when you put your mind back to a couple of years ago at that $11,000 a metric tonne, considering what the price is today. So for strategic purchases, and if you've got a balance sheet strong enough, it's wise to buy and, of course, store. And this is what the Chinese market's been doing for, a while as far as, stockpiling in their warehouses. So if that's your strategic intent and that's what you're capable of doing, it's always best to buy low and sell high.
And yet they seem to be fixated with strong balance sheet is our most strategic, it's our biggest strategic priority. I mean, is that almost tautology?
Well, it's also, you know, corporate bonds and of course how deep and BHP have naturally they've had those the major concern as far as Brazil and you know that terrible situation going back about 6 or 9 months ago. So, you know, miners by definition are in a very well, they're in a risk management business. And think about, if you can put your mind across to the Baker Hughes rig count. In 2014, Carsten, we had 1,600 rigs. We're now at 396. We had a low of 316 in May. So that just gives you a demonstration as far as what the mining companies and oil exploration companies have to deal with as far as flexibility and price, volatility.
Yep.
Speaking of risk mitigation, thinking about, some of the commentary coming out of miners now, for the first time in probably 3, 4, maybe 5 years, we're starting to hear some comments about growth, some comments about CapEx. It feels to me like the mood has changed just ever so slightly towards growth, away from capital preservation, away from dividends. It feels like the bad news has been delivered. The miners, and to some degree shareholders, now looking for the next growth leg, the next growth story. Is that the vibe you're getting, Peter, and which companies are most likely to take advantage of that?
Well, I think so, Scott, but also we've had, it was such a massive washout when you looked at crude and you looked at copper, aluminium, zinc. Everything was just massively hit. And it was just a little bit of a turning point. And after that washout, the green shoots are starting to appear. The large miners and so on. I think that the commodity story has just gone through a little bit of a hiccup. There's, plenty of supply out there, but more importantly, the demand picture really hasn't waned too greatly. And, when you think about electricity, think about all of the inputs, there's plenty of demand out there. So I think that will continue. The BHPs will look rosy at $20. I think, the Vales and, of course, the Rios, you'll look back in 10 years and you'll say it was cheap buying.
Well, before we go, is the greenback going to cheapen this week, or is it going to appreciate? What's your call based on Fed minutes?
Well, I think it'll probably come off a little bit, Carsten. They were sitting at around about 95.5 US dollar index against the basket of 6 currencies. It's going to be a difficult one to forecast. Who would have expected the weaker numbers to come out last week? It's all over the place. It's very choppy. You had non-farm payrolls knock the ball out of the park at 255. And consensus and many analysts were saying, it's 130 to 150. So, I don't know. It's a brave man to put their toe in the water at the moment.
And the Nasdaq's running at fresh record highs alongside, so go figure.
Yeah, you bet.
Tech titans to the fore. Thanking you, Pete McGuire, XMGroup.com, Chief Executive, live at our Sydney CBD studio.